Hey guys, welcome to another video here in the foundation series. Today we're going to be talking about candlesticks and how to read a candlestick chart, a naked chart. Okay, so let's hop right in. Do want to say I'm going to keep it very simple because if you do a quick little Google search like I just did, you're going to find a lot of information, a lot of patterns, a lot of knowledge about candlesticks, different patterns to use, and don't get me wrong, they're great. They're great to know, but don't rely on these without knowing the mechanics of it, okay? And the mechanics are very simple. So let's begin. How to read candlestick charts. First things first, what's a candlestick? Candlestick is a trading range within a time frame. So this is a daily chart, right? So we'll take these as a daily candle. So candle, a bullish candle is when price closes above the opening price, and a bearish candle is when price closes below the opening price. These lines over here are wicks or tails. They signify the highs and lows of that particular trading range in within that time frame. So on a daily chart, one candle would be the low of the day, the high of the day, and the close will show the closing price of that day at 4 p.m. Eastern Standard Time. That being said, let's take a look at the chart. Let's see what we can come up with over here. Let's take a screenshot so I can draw. And all right, so bullish candle, super simple, as I said, right? Bullish candle is a close above the opening price. Bullish, bullish, bullish. Bearish candle is a close below the opening price. As you can see right here, right here, right here. Okay, so now let's talk about wicks. Wicks are simply the highs and lows of what participants traded within this time frame. So these are daily candles. So within a day, we see over here, for example, a low at this price below the opening price, meaning sellers tried to push price towards the downside but failed, as you see a push forward closing above the opening price and with like no wick at top, meaning a very strong pull. Okay, we see another example here, right? We opened at this price, we kind of pushed down, sellers failed to follow through, and buyers came and closed above the opening price over here. Okay, on a bearish side, here's a perfect example of a nice wick. We close below the opening price, but as you can see, sellers came and brought price all the way down here, which is around the 5,800 level, but failed to follow through as buyers stepped in, making the daily close 50% of the trading range. Okay, think of these candlesticks as a trading range within the time frame. And the strength of the candle, which is what we'll go into next, is the strength of the close, right? If a candle closes anywhere within 70% of the trading range, then it's a strong close. Anywhere below 50, depending on where it's at in the market, is a weak close. So let's look at some examples here. Let's actually go into the 4 hours so we can see more information. Okay, so let's see. So as I was saying, the close of the candle, the body, this is the body, right? The body is the filled part, is how strong a candle is. So if we take a look here at these bullish candles, right? Close practically at the tippy top, no wick up top. Here we see a little bit of a wick, 50% of this trading range. However, if you look at the market structure and context, then you can anticipate a further move up. See another bullish, strong bullish close, another bullish close, another bullish close. Okay, now let's take a look at some bad examples per se, right? So we see, here's a great example. We see a super strong bearish close coming from these highs. So you could anticipate the market to continue to the downside. But when you're trading, that's why this is a, I believe it's called like three soldiers. You would take this pattern to the short side, especially since you break this market structure. But context is key, right? So taking into consideration that we're at a support area, we would wait for another candle to confirm. If this were to happen up here, then yes, then it would make sense to position yourself to go short. But because we're on the low side of the map, we want to see what happens. So as you can see, a big, strong, bearish candle failed to follow through because buyers stepped in and closed relatively strong. You see sellers try to bring the market down, but failed as buyers came and closed practically 80% of the trading day range. Okay, here we see a perfect example, right? This is resistance. We see a strong bearish candle. Why do I say strong bearish candle? Because you see these sellers come all the way down to support, still closing below these opening and closing price, which is something you want to take into consideration. So that's and we're at the top of the range. So this candle right here, we open, buyers tried to push price up, failed, and we closed bullish. So a good entry would be there to take these lows. And then as you can see, we flush down. So the strength of a candle is how uh, much it fills the trading range. Okay. Now, you have to take into consideration the context of where you are in the map, but keeping it simple, if you have a candle that closes like this, then it's super strong. You would expect a continuation to the upside. So here's a great example of context. Okay, we see this big run up, right? We're at a resistance right here. So as a trader, you see this red, my bad. You see this red candle right here. You might expect, oh, we're at resistance, big, super strong bearish close, right? Practically a very solid bearish close, right? You have wicks on both sides. It's literally as I drew it. You would expect it to go down here. So always wait for a confirmation, right? What's a confirmation at this point? I would expect something to break that low, retest, and then follow down here. That would be it. But as you can see, buyers pretty much shook out these shorts. This was a take profit type of deal candle, and huge engulfing candle. That's the name of this type of candle, and we continue to the upside. So again, strength of the candle is how much it is filled, or the body of it. All right, and the last thing I want to talk about is consolidation candles. These are doji candles. Let's take a look at bigger time frames so we don't have that much noise. So what's a doji candle? A doji candle is a particular candle that is telling us that there are equal amount of buyers and sellers, and they have agreed at the same price that it opened. So if we take a look here at doji candle, okay, we see push up, doji candle price open, pushed up, pushed down, and closed relatively to the opening price. So you can anticipate a balance, a range happening in this week. This is a weekly chart. So if you go into the daily or the 4 hour, you probably see a lot of this, right? Dojis are really good candles to show a slowing down in momentum or a shift in sentiment. Of course, you always have to look at context and wait for a follow through, but they practically tell you there is a balance in the market, and we would want to see what happens next. This is actually a great example because here we see upward movement momentum. We see a doji. You would anticipate um, a shift in sentiment. You have this follow through candle right here. We see sellers push below these lows, and this is a weekly time frame. When it comes to trading, the higher the time frame, the stronger the candles per se. So you would expect um, people to, short the market here. This is resistance, doji, perfect setup. Now, that upcoming week, we push lower. I don't know if it happened the beginning or the end, but buyers came in and push higher and close above this high. When you close above a previous high, it's a strong indication that price is being accepted at a higher level or a lower level. Okay, so let's take another look at a doji candle. I want to talk about this candle right here, this one. So this is essentially some sort of doji candle, but with a long wick on one side, showing a big imbalance on one side. So you can see that we pushed up, right? We failed to follow through. Sellers came in, the buyers came back in and closed right at the opening price. You can read this as a slow in momentum because we're at a resistance and we see sellers come in and buyers still not able to offer higher than what it previously did. And as you can see, that big engulfing red candle came in. Let's look at the 30-minute chart to get more examples. So again, I want to recap because trading candles is very simple. It's all about um, context and doji candles, how much it fills in the doji candle. So let's just super random, doesn't matter. So all right, as I was saying, this is a very strong bullish candle because we practically closed with no wick at the top. So participants accepted price over here. We follow through. Oh, then we see some doji candles showing a slow down in momentum, consolidating price, creating a price range. And once that's done, you would want to see some sort of candle, right? We see this bullish engulfing candle close above the highs, but it did not follow through. Always wait for the follow through. Follow through. Okay, it's super important. Follow through context and follow through. Okay, see, you would expect to go long right here, but no follow through. But then this is kind of tricky because you see red, green, and then consolidating again, red and then green. So trying to trade this is you'd go nuts. But okay, so all in all, as I said, bullish candle is a close above the opening price. The bearish is a close below the opening price. The wicks of a candle are the lows and highs of that trading period in time. So if this is a 4-hour chart, the low and high of the wicks are within that 4-hour candle. And the strength of it is how deep we close from its low on a bearish side or um, high on a bullish side. Okay. And that is how do you read candlesticks? You just have to truly go into the charts and read the charts. I would do it on a 4-hour time frame so you can uh, remove some noise. So for example, right now the market just opened, futures market, the ES. We see what we see over here is pretty simple. We see big push down. We see bearish engulfing candle, big strong bearish candles. This one we kind of see some buyers step in, fail because you see it close below that low. Again, another bearish candle, bearish, strong bearish candle. And this one right here is like the most bearish candle you can get. But where are we in context? We're at a support, right? Support and resistance right here if you want to uh, get a little bit more technical, but that's for another video. So another, do you expect another bearish candle after this huge drop? Probably not. You also have to think about how much it can drop, right? You have to look at history. But as you can see, we had a nice little uh, bullish engulfing candle, and we're kind of following through to the upside. But yeah, you have to watch the chart. You see how much it falls, how many points, read that. Like, this is a big fall. This is, a semi fall. And just read the chart as it is, looking at previous examples of like, oh, this happened. Okay. And that is how to read candlestick charts. Thank you guys for watching. If you have any questions, just shoot me a DM or comment in the community. Thank you guys once again.